Hey guys, how you doing? Hope you're well. It's Alessio. In this video, we're going to take a look at this chart, which I think is a sign of the crazy times we're living in right now. Let me explain to you what this chart is. Join me. All right guys, welcome back. Before we start, let me just tell you where I am. I've traveled to the south of England. Here it's Dartmoor National Park. Just look at this, guys. Amazing field behind me. It reminds me of that story by Arthur Conan Doyle, The Hound of the Baskervilles. All right guys, so firstly, I want to show you this chart. This chart is courtesy of Jason Geppert of Sentiment Trader, which I think is a very fascinating and a crazy chart for us to actually consider. So what this chart is showing to us is that the ratio of profitable money-making companies has fallen dramatically against companies that are non-profitable or non-money making. So what this chart is potentially showing to us is that potentially more non-money making companies, more non-profitable companies than there are profitable companies, which, by the way, is absolutely crazy when you think what's happening right now in the stock market. The stock market has been rallying high. The market, the S&P has been rallying strongly higher, making new highs. But as you can see, this rally is basically on fluff, nothing but just pure speculation. It's a sign of the crazy times we're living in right now. And here's something very interesting about this chart. Notice that the last time this ratio fell so dramatically was back in 2007, 2008. And we all know what happened after that. So notice the last time this ratio was so low, the ratio of money-making versus non-money-making companies, what fell so dramatically low was back in 2008. When you can see from that chart, that was the last time that this ratio fell to such a low level, and look what happened afterwards. As you can see, then the market dropped by about 50%. The stock market entered a bear market, essentially. The same thing happened about 20 years ago at the peak of the dot-com bubble. Okay, so at the peak of the dot-com bubble, also this ratio fell dramatically, essentially showing there are more money-losing companies than there are profitable companies. So that was back in the year 2000, at the peak of the dot-com bubble. By the way, guys, take a look at this in front of me. Look at this amazing bridge. Isn't this nice? So anyway, I think what this chart is showing to us is that currently this is a warning to the markets that, we're seeing the stock market essentially going up, rallying higher on over-speculative, over-bullish sentiment. But really, behind the scenes, underneath the bonnet, what is there really? As we can see, just like in 2008, just like in the year 2000, there are now more money-losing companies, more non-profitable companies than there are actually money-making or profitable companies. Which again, noticing what happened to the market in the previous two times, in 2008 and in the year 2000, is not a good sign for the markets. And it's not a good sign for the economy. Now, don't get me wrong here. I'm not saying that just because we're getting this warning right now, that necessarily this means the market's going to crash and then we're going to go into a bear market. It doesn't mean that. So as we know, the market can stay irrational longer than anyone can stay solvent. So in other words, while it's a warning, by itself is not a sign that we're heading into a bear market immediately. Now, I am making a video for you, which will come out very soon, as to when I think this bear market could start and why. So I'm actually making quite a detailed video for you about the technical picture as to why we're likely going to enter a bear market and the potential downturn, economic downturn. It's very interesting. That video should come out very soon. But for now, this chart, I think, is a warning to us, and it's something we should probably pay attention to. All right, guys. So look at this, guys, in front of me. Really beautiful scenery here in the south of England. All right, guys. Hope to see you guys soon in the next video update. Cheers.